will wait for a while for everyone to actually start joining in. I believe some of you are actually joining from the stream side, so I can't see on the screen. In any case, today's topic will be trade management, trailing stop loss techniques, and we will just hang on for another 5 minutes for more people to join before we start with today's topic. If you guys have any questions, do feel free to actually type them down in the chat box or the Q&A session. And we will also be doing a live analysis for today after we are done with this topical explanation. All right. Okay, I think today we can start with our webinar. All right, so let's start with today's trailing stop loss techniques. So a little bit of disclaimer. So whichever opinions or context or analysis performed today is just solely based on my interpretation, and as well as is not the interpretation of Vantage, and any analysis done today our concepts taught today are actually based mainly for education purposes, not to be set as trade advice. All right. So let's look at the next slide. So today's agenda, we are looking at 4 different agendas. We're looking at anatomy of a trade, figuring out when should we be using stop loss, should we be incorporating that into your trading technique, trading strategy, trading analysis. And thirdly, we have different trailing stop loss techniques. There are definitely more than one, so some might fit better in your analysis, but as opposed to others. All right, just hang on a second. Something wrong with the technicals. Just give me a second. All right, so we are looking at I think we're back to normal. Okay, so let's look at some, lastly, we also have examples of trailing stop losses. I'll be showing you guys some of the screenshotted graphs that we have, and I also will be using trailing stop loss as part of my analysis today during the live analysis showcase. All right. Let's take a look. Okay, so we have 2 different category. First will be break even. So we have the partial profit, the trailing stop loss, and the ideal invalidation. So these 3 categories, like your partial profit, trailing stop loss, and ideal invalidation, actually allows you to make a break even on a losing analysis, or in any case where analysis is going in the opposite direction of whatever you have wanted. These 3 ideology or methods will actually allow you to come back to a break even. So it's pretty good in a sense that you are entering yourself in a zero risk trade, right? So secondly, we also have the entry, the stop loss, and the take profit, right? So these 3 are the most common one that we are looking at. So you don't just put in an entry and then just like take profit at wherever you want. So these 3 are the basis of looking at it. So normally people do use entry, definitely. However, whether you follow keenly on your own take profit and stop loss is one of a question that you guys should pose to yourself. All right, so we are looking at take profit and stop loss recap. So previously did go through this and say it before. Stop loss, we are normally looking at a slightly above the major resistance area where we put our stop loss. This allows the price to actually have a bit of a bit of space to actually react to the resistance before it drops back down in this case. And we also have the take profit. Excuse the yellow color box below, it should be major support area. So when we take profit, we do put our take profit slightly above our major support area, which is the reason why we do that is because so that in any case where the price does not reach its full potential to drop down to the support and react to the support, we are already out of the trade and has already taken full profit of the whole entire movement that we are looking at. All right, so we are also looking at all right, and then we are also looking at understanding the trailing stop loss and other type designed to lock in profits or limit losses as a trade moves favorably. So automatic trailing stop loss, it actually means stop loss moves accordingly to price moves favorably. So later on, I will actually let you guys see the automatic trailing stop loss. So I will let you guys see the manual trailing stop loss instead of automatic. Automatic is like your AI stop losses. All right, so we are also looking at manual trailing stop loss, moving stop loss level based on mechanical indicators. Okay, so now we have different types of indicators that allow us to use as stop loss. Okay, so the first one is very obvious. The first one is our moving average. Second one is our parabolic SAR. Third one will be our ATR. And then last two is the most uncommon ones. These are just our price action levels. And last one, this would be something like a moving average, but a bit different. So later on, you guys can make a guess what is it, and then we can also take a look at that. Let's look at our sell entry. All right, so in this case, we are looking at a upward moving trend line on the bright blue line over here. All right, and also a moving average, the light blue here, cobalt blue for the trend and light blue for the moving average. We can see that price is actually maneuvering below the support that is at 1.57891 and trying to drop below the support and as well as drop below the trend line and the moving average at the same time. So this would be keen. Normally we would see this as a selling opportunity, and hence we are looking at a sale entry here. Price indeed did move down below the support that we originally looked at, and we can see that the price is below the moving average, which also indicates a downward movement. So the highs of the pricing has been captured all under the moving average, which we can see that it's a pretty good downward moving, continuous downward moving trend. However, if we are using moving average as a stop loss, if price once trigger the moving average line, right, or trying to surpass the moving average line, this will trigger the stop loss that you have indicated and therefore close off your trade. All right, and therefore close off your trade. So this is something that you guys can consider taking moving average as a triggered stop loss. Obviously, if you guys did actually have a combination between the moving average trailing stop loss and your price levels, you might have seen a critical support level over here. I'm not sure. All right, there is a chance. So you could have already done your take profit here and your stop loss here. Right, so basically you could set these two levels. If price shoots above this amount, it would have stop loss and you still would have earned this whole stretch of downfall. All right, so this, if your stop loss was being implemented on the moving average line, then you would have seen that yes, you did indeed got out of the trend before it bounces back up and rip off your earnings. So you can see that at this point of time, it's all smooth as sailing. You are getting a profit from here to here. So next up, we are looking at a trend line trailing stop loss. We are looking at a resistance downward moving trend line, this red color dotted trend line. So this will act as our trend line trailing stop loss as well. As long as price did not attempt to exceed the trend line or surpass this trend line resistance, we will assume that our trend is still going to play out up to this point until when the price try to move above the trailing stop loss trend line. We will still continue the analysis, right, until it exceeds, and then we would implement a stop loss over there or close out our entry, because we then could see that there's a chance where our analysis has already been fully played out, and now we are moving on to the next trend, right? Okay, moving on. So next up, we are looking at a parabolic SAR trailing stop loss. So parabolic SAR moves similarly like something like a how do you put it? Something like a moving average, but it's not so much of a moving average. So you can see from the front part that the first part, right? You can see that price are on a upward moving trend. So you can see the parabolic SAR, the dots are below the price point, which indicates a upward moving trend and is acting as a trailing stop loss and as a support. Once the trend has a movement or there's a change in trend, you can see the parabolic SAR will turn its direction, or rather from moving from downwards to upwards in this case, to symbolize a resistance indicator for a downward moving trend, even if it's a small trend. However, one big thing about parabolic SAR is that parabolic SAR is lagging like most indicators, but parabolic SAR will be slightly more lagging if you are very dependent and solely looking at it. All right, so that's a warning. So I feel that parabolic SAR has to be paired with great analysis and instead of just using the parabolic SAR. All right, that's something of a opinion that I feel that when I'm using parabolic SAR, these are the symptoms that I see. Okay, so you can see that then after actually price did resume back to moving upwards. So you can see the parabolic SAR went down again to act as a support that we are looking at. And then we have a downward constant movement. Then we can see that price has already go below the parabolic SAR. And you can see that it did attempt to exceed the parabolic SAR. And the junction where price tried to exceed the parabolic SAR, you can see that the new parabolic SAR at the bottom has been formed. Let me just take out a pen. Yeah, so you can see the new parabolic SAR has been formed, indicating that now price is going to move upwards, right? So then we have the Chandelier and ATR trailing stop loss. I'm not sure whether you guys have heard of Chandelier as an indicator. It is Chandelier stop loss as an indicator. If you guys have, that is absolutely great. If not, you guys can take a look at this. Okay, so the green one is a Chandelier. We have a dotted connection with the dotted green ones are your Chandelier, and then you have an ATR stop trigger as well. It's a pair that you're looking at right now. So Chandelier actually something like a moving average. It's just that their movement is way more steep, and it will capture every single bounce and peaks of the price movement, which gives it slightly more accuracy. Okay, so you can see that now these along the dotted lines are the peaks and the closing price are pretty near, forming dots, and then moving down is this side, right? So moving down, there's a straight line, and then relatively connected in the pricing, and then we have a downward movement again, relatively connected, and then straight down. Okay, so these two dots actually symbolizes quite a near pricing and going forward and straight down again. So somewhat like your parabolic SAR, it's just that it doesn't move up and down. Also very similar to your moving average. So basically their concept is just pretty similar in capturing the movement, the highs and the lows of the price. All right. Moving on. So we have a graphical example for your Kiwi dollar. All right. So this is a moving average one. So we could see that, oh, we have decided for a sale entry over here. Right. So we can see that our take profit is over here connecting to the previous low. Okay, so we can see that price has been going under the moving average for the entire time. Let me just remove this. Okay. And then sorry. So before our price did have a chance to actually go above our moving average stop loss, right? This is initial stop loss. So along the way, you could move your stop loss down according to the moving average or according to the highs. In this case, we're using moving average as the indicator. So we are going to move according to the moving average. And then before price has chance close us out, we are already taken profit of the full movement. All right. Let's look at the next one. We are looking at $CAD for support resistance stop loss. In this case, we are capturing a upward movement prior, and we are doing a downward fall. Okay, so we are looking at a 1.30750 as a support resistance overlap. Right, so previously in earlier stage over here, hold on, let me just draw. Okay, earlier in the earlier stages is acting as a resistance at this price. However, price managed to actually go past it, right? Go past it over here. So now it has reacted 1, 2 times, acting as a support over here, and price after the third try, and then finally drop downwards. So this would be a support resistance overlap acting as a trailing stop loss. All right. So we are, after it has went down as a sale entry, we can move on to the next support or resistance as our next trailing stop loss. In case price actually came back to a upward movement, we will have canceled and stopped out without any loss and possibly keep as much profit that we could have already had. All right. So that's all for the trailing stop loss and stop losses for today. Do anyone have any questions before I move on to the live analysis? Okay, I'm guessing not. Let's just move and change our screen to the live chart. Can't seem to share screen. Yeah, there we go. Okay, okay, so we are looking at this right now. This is $CAD that was done yesterday. Maybe let's start with $CAD again today. We're looking at a upward movement. We're starting with our weekly chart, so we will be also crafting out some trailing stop losses techniques that we did learn today. upward moving trend line. We also have a support resistance overlap. Let's look at the daily. So on the daily, we have a upward moving trend line here as well. Let's continue looking at the H4. So H4, there was a previous big downfall. So now we are looking at the upward movement. There's a chance that we can see a possible channel, upward moving channel. Are we seeing it? Not a very nice one. However, we are looking at a upward moving trend over here, slightly away from the daily trend that we have drawn. And then we are also looking at a downward over here. So you can see that clearly our price has already exceeded the triangle that we are talking about yesterday. Right, so we are looking at a very good amount of entry here. Let me use Fibonacci for our stop loss. This is a bit far, both too far. Should use retracement. 38.2 seems to be good with me. Just nice, it coincides with our downward moving trend line that it has already surpassed just now. Hold on. Then we can use our Fibonacci projection for our take profit. Very nice. 1272. So our price is clearly about trying to exceed 61.8. So that will make our entry a bit more convincing. All right, so let's look at some indicators before we add in our trailing stop loss. Let's look at RSI. Sorry, stochastics instead. Stochastics is at the peak, but we should be looking at 24 and 5. What are we seeing? We are still seeing at the peak as well. So better to observe in this case. Do observe if price actually successfully exceeds our buy entry before anything. Let's look at Ichimoku cloud. Okay, price is clearly above the cloud. Let's hold on for the price to make a move. All right, price to make a move. So in this case, let's just say we are looking at Parabolic SAR. Let me just close Ichimoku for a while so that it's much easier. So you can see that actually Parabolic SAR in this case has already turned into an upward movement. So let me just use the historical price as an example. For Parabolic SAR, you guys have to actually look at the charts once in a while so that you know that there's a change in direction and you can implement your trading stop loss as you go. You can see that right here, for example, I'm doing a buy over here, right? And then I'm moving up, I'm moving up, I'm moving up. All right, so I will put a if I have already exceeded this place, I will put a trailing stop loss at the previous high. All right, because we're still undergoing, and then we'll put another trailing stop loss over here. And then once it reaches parabolic's top, right? In this case, it will cut off and stop loss at the peak as well. All right, so for parabolic SAR as a trailing stop loss, you guys have to take a look once in a while in your analysis. If not, it can't really detect. You can't really detect where to put a trailing stop loss. All right. Okay, so let's look at another pair. Okay, we are still looking at a very solid upward moving support line. Okay, and then we are seeing a resistance for the weekly. Let's look at H4 instead. Nope, no channel, not much of a movement here as well. I'm trying to see whether it's trending, but it's undecided at a point of time, but we're still seeing there's a chance of a pattern. All right, could be a buy entry in here, but a very short one just to here. And obviously we have to do a very short, very small stop loss, right? Because the trade is relatively near in this case. I think this would be great, just right in between. All right, so if price actually really falls below, there's a chance that this is an incorrect analysis, and then we can deal with it. All right. Yeah, we are seeing a continuous upward movement, but just a small one, right? You can see the stochastics has bounced off the support levels. And then we are also see, is this a downward movement? I need to see. Or is it straight? It's downwards. Okay, so we are good. There's no divergence that we are looking at. I believe Ichimoku cloud, it will still be under, yeah. Because the big trend is under, so we are playing with a really small movement over here. In this case, we can use a take profit and stop loss. It will be great enough instead of a trailing stop loss because the movement is really very small. Okay, let's look at gold. Nothing much to see for the weekly chart apart from this downward moving trend previously. Sorry, the camera somehow just keep disconnecting. So it goes along with the mic. Talking to myself with to myself. Okay, let's look at daily. And then we have a support here, a very strong one at 1622.838. And then let's look at H4. Just realized, yeah, maybe we can use some Christmas vibes. All right, so let's look at a upward moving. Could this be a channel, the one at the top, right? Still within a channel. You can see that the current top has exceeded the previous high. So we are looking at if price actually did not go beyond this line, we are looking at a very solid indication for buy. And then we can use the previous time resistance over here as well as a take profit. This was back in August. Just a small one as well. And then let's put in a very close stop loss. Just right below our channel. Okay, let's take a look at it. Yeah, 61.8 only. And then let's take a look at entry point 78.1, and our stop loss could be closer to 100 if we want to. Okay, and then let's take a look at stochastics. You can see that, oh, it has dropped down to the current support. All right, so let's hang tight, and let's take a look. Okay, and then we can look at moving average. Too far for H4, maybe 14. 9. Okay, so hold on. 14 seems fine actually. Okay, yeah, 14 did capture the lows and the highs very nicely, and here is non-trending. And then you can see that it goes up high, captures the bounce, and now we are below the moving average. And now you can use moving average as a trailing stop loss and do observe it time to time so that you know when the price did drop below or above, and then you can plan your stop loss accordingly. Okay, let's go. Let's do silver. Yeah, this is actually done yesterday. Very nice analysis just right before the stop loss and interacting with our downward resistance channel. Now we are moving downwards from the sale entry, and now we can see that price is also below our moving average, which gives us a bit more confidence in the price going below. So if your sale entry is here and it has already been played out, do move your stop loss to the peak of the moving average that was last at. All right, so we can move it, or you want to move it slightly above just to give yourself a bit more space. That'll be great. And this also protects your small profit, or even gives you a break even in any case that it decides to bounce up and burst out of the downward moving resistance. Let's just say it moves down slightly more. You can move your stop loss along the way and also do a what do you call it? Do a saving of your basically your capital or whatever you have earned or profited. Okay, and still going. So for dollar yen, it's a very perfect so basically this was done yesterday as well. Very nice analysis. We can see that indeed follows the descending channel. However, we are taking a small risk by going opposing to the trend, which is downwards, but now we are doing a buy entry at 1.272, and then we are moving upwards to a take profit, which should already hit if you put it at 61.8%. Okay, so in this case, you can see the price is above the moving average and it plays out perfectly. Okay, let's look at what else do we have to look at. Let's do something that I haven't done this week. CAD yen. All right, let's look at the weekly chart. Upward moving as per normal for yen pairs. Okay. And then we have reached a high that is dropping down right now. Let's look at daily. So if you want to see on the daily, a bit more obvious in a sense where it looks like a upward moving free fall, and then we have a channel that looks like this. A small one actually. But on the H4, it will look much more nice, right? So you can see that it has broke out of this upward moving channel, and we are seeing the price to descend, and we are also looking at this possible support over here. Let's look at H4. H4, very obvious downward moving in a uptrend. So in this case, I'll be looking at possibility to sell. We'll take this as a take profit instead. And then let's use support and resistance to find our stop loss. In this case, I would like to keep my stop loss way closer. So I would have to put about 50% of it retracement just right below this the previous high. What we are looking at, this take profit is actually our historical support pricing. Let's look at indicators. We are looking at a possible downward slope on stochastics. Over here, there's a bounce previously. We can see that there's a chance that it will follow through as the trend line and drop back down for more. Let's look at Ichimoku cloud. We can see that our price is way below the clouds, and we are also going with a red above blue conversion of a baseline over conversion line, right? Situation. And we are also looking at moving indicator, moving average. 114. I would need to make this another color. If not, you guys can't see. All right, so untrending, normal, and it's capturing all the highs. I think it could do slightly better. Yeah, so this will really capture all the highs that recently we have, and we're seeing that whether price will actually break off this high. If it keeps under, then we could actually do our sale here, and it moves under, we can move our stop loss to this next to the sale entry, which allows us to actually eventually break even if our analysis goes south. Let's look at I'm not sure what to look at. Okay. Pound dollar. Okay, let's look at the weekly chart. Wouldn't really count this as a trend line per se. However, this has been a resistance since 2017, so a pretty big resistance. Let's look at daily. We are looking at a I would say this is a relatively downward trend prior, right? And then now we are moving up again. Do have to take note of this current price level at 1.22958 as a resistance that has not been passed since June of this year. So that's something to consider. And we do have a upward moving line here. Let's look at H4. All right, for pound dollar, I feel that it would be preferred if you guys take a step back before proceeding. However, if you're looking at H1, you probably already saw this. All right. Let's look at one last one. Frank yen. Haven't been looking at this pair for a while. As per normal, yen pairs are against yen, always up and rising. Let's look at daily. Not much to see, to be honest. H4, you can see that right now it's pretty much stagnant. We are not very much in trend. Let's look at another pair. DXY, let's just look at the DXY. Let's look at the daily instead, right? Let's do the trend line on the daily. Previously upward moving, we can see that now it has gone down slope and we are looking at a downward trend. Let's look at H4. Whoa, interesting. Okay. Yeah, there is a downward channel. We have a support turn resistance situation. Okay. All right, so we can see that there is a high chance of it dropping. However, I do think that we should observe beyond just this. Let us bring out our indicators. So I see the 9 MA is definitely not the natural EMA. So I think we could go up a bit so that we can capture all the high and lows of this graph right now. This is not half bad. So you can see that right now, if we are looking in for a sale, if you are looking at MA as an indicator, you will definitely wait for the price to actually exceed or move downwards of the MA. However, in this case, we are not using this as an indicator. We're just using this as a trailing stop loss. So we can also take a look at it if we are looking into a sale, and if price actually exceed above the moving average again, there's a chance that we could use this moving average as a stop loss per se. All right, I guess that will come to the end of today's webinar, and I see there's no questions. So look forward to see you guys in the next webinar. All right, thank you guys. Thank you so much. Goodbye.